So we're going to have the last meeting today until we meet in person on the 16th. So I think that is what we're going to be doing today. That's it. Okay, let's close something. Okay, so it's going to be a quick one. So we started by showing you some indicators. Really, those indicators are ones we're going to be using to prepare yourselves for the next strategy. We know that we are using the 4-2 strategy.
Hello.
Hello. Can the person can you mute? Can everyone mute the speakers or the volumes or something like that? All right. So what we are trying to do right now is we are trying to make sure that you understand how to get these indicators up, and then at least you understand how they work. So the first indicator that we talked about the WT cross. And then I think we talked about this thing, some other ones like the RSI, but we'll not be using the RSI mostly. So we will not be revising that today. You can go to the videos and look at it. And then we talked about the TDI as well, which is this one. And then we also talked about moving averages yesterday, which is this one. Okay, so I'm just going to revise them, just quick revision, and then we can just summarize everything. And then the next meeting we'll be having will be in person on the 16th. All right, so I'm going to turn off these things, and then going to turn them all off. All right, turn them all off. And turn them all off. So all we have right now is just the price actions and the psychological levels. That's what we've got right now. Okay, so price actions and psychological levels. That's what we have at the minute. So what we want to do now is we are in the 4-hour. So we're in the 4-hour. Let me just take off some of the psychological levels. Oh God. All right. So we've taken off some of the psychological levels. We've got this horizontal lines. Let me clear them all off. Clear a couple of them off. Yeah. Then vertical. That's fine. Now, imagine you have a clear chart like that, and you want to bring up the WT cross, right? I told you that you go into the WT, you go into indicators. When you go to indicators, you just type in the wave trend cross. You want the lazy bear one. And then when you open up the lazy bear, you would have to go into the top here. And then you want to go into where it says these brackets, source code. You go into the source code, and then you go to the top here, you click on it, and then click on it, and then you make a copy. It doesn't give me access to make a copy this time. So I think because I've made a copy before. So once you make a copy, you then come and then you close it. Yeah. And then you go into my scripts, and then you see it sitting here. So this is the WD indicator, and then it comes. So when it comes, you would have to go in and edit it nicely. So go into the settings, you go into style, you take off all these plots, the plot 1, 2, 3, 4, 5. You leave the 6 and the 7. You take off the 8. You leave the 9 and 10. And then you take off everything else. Just this. Now, when you go into that, you have to edit it. So for example, when you come here, normally you see that This one will be some red or something, but you edit it first. The first editing that you want to do is you want to select a color which is light, like almost like an off-whitish color. And then when you go here, you select area, right? When you select the area, you get something like this showing below, right? You get something like this. Now let's go back to settings again. And then the next one, which is this plot, you go in, you select this blue, and then you go here, you select area. When you select that, you get something like this. Now, the third thing you have to do is to go into the dots, which is this plot, right? So when you go into this dot, what you're going to do is you will come to the first one, select red, and then go to the dots. Sorry, go to the first one, select red, and then come to the dots here. You select the biggest dot, or maybe the one, just the one before it. And then go to the next one, select the green, or any very nice green. Then you select a dot, right? And then you come off. And then you come here and you say save as default. And then okay. Then you get your WT cross very nicely like that. Now, when you want to go into the where you want to get the how we call it, the TDI, which is the next indicator, you go in here to indicators, go and select TDI, right? So when you come to TDI, normally you see the traders dynamic index, the gold mines. That's the one you want. When you select it like that, you get something. First, you wouldn't get, it doesn't look like this, but you have to go and edit it. So you go into settings. When you go into settings, normally you see everything like highlighted like that with the plot area. That's how you might see it, right? But you have to go in and edit it. When you go in and edit it, you take the upper band off, the lower band off, leave the middle band. Slow moving, you take it off. Fast moving, you leave it on. And then level, you take the level off. This next level, you take that off. You take everything up to the bottom. Now, when you do it, normally you see that the fast would be a different color. I think it might be, I don't remember what color it is. But you go and change the fast to green, right? Select the thinnest listing and then leave the middle as such. The other thing we need to do is to go into the inputs and edit the inputs. The input, we have 5, 11, 1, 7. So when you change the numbers to reflect these numbers, 5, 11, 1, 7, and then go down and save as default and okay it, right? So I'm going to come off this one because we already have it here as this one. We've already got it here. And let me check the settings. Well, okay, this one says 5, 12, 1, 6. So you can set it, set it to 5, 12, 1, 6. 5, 12, 1, 6. The other one has a different default. So save it as 5, 12, 1, 6. The style is the same. You take everything off, leave the middle band, leave the fast band, and then you can take off the levels from it. We don't need the levels. Everything off, and then save as default. Okay, just like that, plain like that. Okay, now, the other one that we are looking for is the WT cross. So if this is WT cross, let me close my WT cross here, and then open my WT cross there. Let's go and edit that one and make sure everything is edited beautifully. All right, I think we're on point. I think we're on point here. Yeah, that's fine. We're on point. Now, from there, we are going to the moving averages, right? I realized that I was looking for a particular moving averages, we call it the MA plus. I was looking for it today and I realized to search for the MA plus, it is not necessarily going to reflect here. You have to go to Google to do that, right? Before then, let's do the other other MAs. Let's go and find the other MAs before we go and find the MA plus, right? And I'll show you how you can get it. The other MAs are very simple. You go into indicators and then you go and type in moving average. So you can see this is the moving average, the normal moving average. You select that. When you select that, we are looking for two moving averages. So the first moving average is the one we've picked up, and that has to be the 20. Let's do that, the 5 moving average. So you go into inputs, and then it should be MA. It shouldn't be SMA. It should be MA. Oh, sorry, it's SMA. That's it. SM, simple moving average, the same as MA. And then when you come to the where is input? Where is input? When it comes to the MA length, you make this one 5, right? And then the color, you go into style, select the color. Where's the style? Am I on the right MA? This doesn't look like the MA I'm looking for. Let's go back. Doesn't look like. Let's go back into indicators. Let's go and find moving averages. This is moving averages. I think this is the one I'm looking for. Moving average is the first one. So when you come here, come and select it. Yeah, that's it. That's the one I'm looking for. You go into input. When you go into input, you just want the 5. So this should be 5. You come into style, you select, and you select blue. Normal blue. When you select blue, and then you OK it. Where's my menu? It's been covered. 1 minute. All right, so yeah, that's the MA I'm looking for. So that is the 5 MA. So input 5 MA style, you put it in the style. This one, take that off. It's not necessary, just the MA that you're looking for. Okay. The next MA is going to be the 200 MA, right? So the 200 MA, you still go into indicators. Sorry, I think the next MA is going to be the 20. Sorry, it's not 200, 20. You still go into indicators, and then you select that. When you select that, what then happens is come to the bottom here, you come into input, and then the length, it has to be the 20. 20. The color, you select white or maybe yellow, something like that. Selected yellow yesterday. So, and then you go and then, okay, that's it. So you have 2 MAs here. If I close the price action, you should be able to see that we've got 2 MAs. You see, we've got 2. One, the yellow is the 20, the blue is the 5. Now we are left with the third MA, which normally it's called what we call the MA plus, right? So I'm going to show you how to get the MA plus, right? I'm going to show you how to get the MA plus. So for the MA plus, you go into Google, right? And then you have to type in this thing. It is called MA plus demand 103 indicator. MA plus demand 103 indicator, and then you click on it. When you click on it, you get something like this, right? That would be in Google. So Google takes you straight to this thing. And then you scroll to the bottom like that. As you scroll further to the bottom. So you see this one, you scroll down this way. You see this whole thing to do with the coding. I think you go past the coding. And then normally you will see this thing like add to your trading view. I think I've added it before, so it doesn't give me that option. So somewhere around here, it will tell you that add to trading view. So you go in and then you click on that, and then you add to your trading view, right? So when you go and you click that and it adds to your trading view, because I've added it before, I don't think it's giving me that option to add. But you scroll down, oh, you see, that will be where it is. That one it says removed from favorite indicators. So you see it here where it says removed from favorite indicators. If you've not added it already, it will ask you add to favorite indicators. Then you click on it. When you click on it, then you go into your trading view. When you go into your trading view, then you can search for it. You can search the MA and then the symbol plus, and then you see it coming up, MA plus D-man. So then you click on it. You know what I mean? So when you go in there, you can now select MA plus as your indicator. When you select MA plus, what that thing does is you can see that based on the trend, it changes color. So let me just cancel these two. And you can see clearly that based on the trend, let me just get these off. Based on the trend, it changes color. So you can see if it's an uptrend, it will change color. If it's a downtrend, it changes color. If it's an uptrend, it changes color. When it's a downtrend, it changes color. If it's an uptrend, it changes color. If it's a downtrend, it changes color. That kind of thing. So that is why I wanted us to use that one. So now let's put our price action back on it. So we put our price actions back on it. And you can see clearly when the indicators, the price or the candlesticks are printing below it, it means that we are in a downtrend. When they are printing above it, it means you are in an uptrend. You can see the green tails. Printing below it, it means you are in a downtrend, right? So that is what it does. I'm going to bring up the other indicators as well. So this is going to be the 20 EMA. Let me check what it is. It's 20. And then let me bring the other one. That is this one. That is the 5, all right? So this is what you want. These are the 3 indicators you want to have and get you ready. Now with that, we can bring back our psychological levels, right? We can bring back our psychological levels to this one. And then this is how it's going to look. And that will get you ready for our next strategy. Okay, so I think basically this is what I wanted. This is where I wanted us to get to. So then we are up to speed and ready for the next phase. So what time is it now? It's 5 minutes to 8. Any questions? If we've got any questions, you can ask them now and I can clarify from here. Okay, I'll leave this thing open for the next 4 minutes, and then if there are no questions, then we can just round things up.
Hello?
Hello.
How you doing, Michael? You up?
Yeah, I'm good, thank you.
I wanted to ask, what time frames can you use for this strategy? The one that you're showing
We're
us
still
now.
in 4 hour.
So
We're still in the 4 hour. We're using the 16 hours to guide us, but we can still use this MA plus, the MA 100 to guide us as to the trend, where the trend is sitting. So for now, these are the three things you're using.
Okay.
We're using this indicators, the moving averages, the
TDI.
TDI, and then this one. And let me just walk you guys through it very nicely, and then you understand how it all ties in. So for example, we'll go from backwards. So now we are at the top here. You see very clearly that there's a dot printed at the top here, red dot. This red dot means that we are at the top of the cycle, and then we should expect to print red candles, which means we should expect to go down until we get a green dot. Then we should expect to go up. So for example, you see there's a green dot here.
Yeah.
At the bottom here. So we started printing green candles, you see, all the way here. So when you walk that line up, we started printing green candles mostly until we got here. Here we had a red dot, and we started printing a few red candles till we got the green. We had a green dot here, and then we printed much more green candles relative to the red. We had a red dot here, and then we printed a few red, relative to the green. So what this guide is that it tells you the cycle, because price does not go up in a straight line. Neither does it come down in a straight line. It will come down, go up, come down, go up, come down, go up. So what it is when we are at the top of the green candles and we're going to come down, this one indicates you that we're at the top and it's likely we're going to come down. So when we are coming down, we expect the market to go down. So it gives you an indication what direction you need to be trading. Do you understand? So for example, we got to the green here, and then we are going all the way up. So you see that there's a lot of greens that we printed all the way up before we got to the red. You know what I mean? Yeah, that's how this indicator works. This indicator, so I'll show you how it works. That is the TDI. The TDI is a very simple thing. You see, just when we've printed the green bottom here, you see the TDI started crossing the green line, started crossing this kind of orange line.
Yeah.
So when it started crossing, it means that the market is also about to go up. When we got here, you see we got a red top here. TDI crossed down, which means that we are expecting to go down, and we went down on this red candle, just that one. We are still possibly going to go down because it is just printed the top. We might have to go down further. Meaning that if you want to go into the market and you are looking for a trade, you should be looking to trade downwards. Generally, yeah. Like, for example, here, you can see that TDI crossed here when we printed the top. So we started going down. So it just gives you a fair indication as to what is going to possibly happen. So we stack this and that to be able to make informed decision, not just those only, but we also look at candlestick patterns. We look at psychological levels. We look at moving averages. So let's go to the moving averages and I'll tell you how it works. So let me close the price actions for a minute. Or let me just close one. Yeah. Okay, first, let me show you how the moving average works on the this one. First, one thing I need to show you that I forgot to tell you that when you go to the moving average for the MA plus, it must be SMA. It shouldn't be EMA. It must be SMA. So okay, that right now, if it's because we are calculating it based on 100 candles and stuff like that. Yeah, so it's SMA. Now, look at this very carefully. I was explaining to yourselves that whenever we are in a downtrend, like here, whenever we are in a downtrend, the candles normally are under the 100 or the MA plus, the 100 moving average. It's under that. Generally, they are under it. So then when we are in the downtrend, it is advisable to trade down opportunities. You come up, you trade down opportunities because the direction of the market is in your favor when you're trading down, opportunities only. And when we are in an uptrend, for example, and the candles are above, it is advisable to trade up, 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 up. Do you understand? Generally, that is the rule. Advisable to trade up because we are in an uptrend. Trade up a lot. So this moving average, which is the 100 moving average, the MA plus, it's able to guide you as to what type of market we are in, whether up or down. Do you understand?
Mhm.
Now let's go to the next one. The next one is, where's the next one? Yeah, the next one is the SMA 20 or the MA 20. What the MA 20 does is that, for example, we are in an uptrend. Yeah, you realize that when we are in an uptrend and the candles are forming above the green, right? They normally will form and come and bounce off the 20 SMA and then go up. Bounce off the 20 SMA and go up. When they cross the 20 SMA, then there must be maybe a psychological line that they come and rest on it before bouncing up. But generally, they'll bounce off the 20 SMA and go up. Come, bounce it off and go up. Bounce it. So if you want to enter a trade based on the next strategy that we're going to use, and you've got your psychological level and everything there, and it bounces off the 20 SMA, can go get ready and find opportunities to trade up. You know, for example, when it's also coming down, you realize that it bounces off the 20 SMA and comes down, bounce it off it, comes down, bounce it off it, and then it will come down, bounce it off it and come down. So when you want to take an opportunity, you should also be able to look at the react when it is bounced off the 20 SMA and then coming down, something like that. There are rare occasions whereby it crosses it up, and when it crosses up, then it will be heading towards the 100 SMA and then come down back to the 20 MS SMA and then continue its process. You know what I mean? So these are like, but these are the general trend. Now the 5 SMA, which is the third one, it's just a close knit. It just helps you to see that the prices are trending. Let me show you what I mean. So we've got 5 SMA. You might not see it very clearly. So let me expand it. And then you can see what I'm saying. If I expand it very widely, you can see that the blue line, which is the 5X, that will be EMA, because the 5, normally we want it to be an EMA. Let me see if I've got it as EMA. Input style, that's not the one. Let's see, this 5 should definitely be EMA. If it is not EMA, then we need to change it. It's an MA, so we need to get an EMA for that one. All right, okay. So you find EMA, go in and go and find an EMA for the 5. You know, so but it works closely with the candlesticks. So you realize that when the candlesticks deviates from the EMA, for example here, you realize that the candlesticks have deviated from the EMA, we expect them to come back and snap. So there are times when you can see like the fact that it's deviated, you should just expect it to come back and snap. If it deviates, it should snap to the 5 EMA because it has to work closely with it. This helps us to understand that if price is moving away from the EMA, we can take an opportunity to trade it back towards the 20 SMA. Okay. And then towards the EMA, something like that. It is not, but we just don't use moving averages in isolation. We combine everything. So when you come to the side of the chart, I'll show you how we can use this. So for example, we are clearly above here. It says that the candlesticks are above. You can see it clearly. Even though it tells you we are in a downtrend, the candlesticks are clearly above. So something like that, what would you do? Generally, because it's clearly above, we are careful to find opportunities that makes us go up. The market is saying we're coming down, but still this thing is saying we are going up. You understand? Normally, when the market is saying that we are going up, we should see this thing turning into green. But this area was like a consolidating area before we go into the green. So let's go and find a place where it was appropriate. And it's just here. Just here you can find it. It was below. Right? It was below here. So below here, we had a psychological level. Right? Let me expand it so you can see the candlesticks because we use the candlestick pattern zone. Below here, we had a psychological level. This thing bounced off. This red line is telling us that we are only going downtrend. So this thing bounced off. You can see that we have something. Do you know the name of this candlestick pattern which has formed on the top? I'll show you. This candlestick pattern. Can you tell me what it is?
Is it a tweezer top?
It looks like a tweezer top. So once that candle closes, we can go into the market. And where would we expect to take a profit? Normally, we would expect to take our profit on the psychological level.
Yeah.
You understand? Yes. And then it goes back and snap our psychological level towards the yellow SMA. And then it gives you, what candlestick pattern is this?
Is it, I was going to say, is it the bullish and go?
That is the bearish
Bearish
engulfing. That's the
engulfing.
opposite.
That's
Yeah,
it.
you've done well. Yeah. And then after that, we can go into here and then trade this to a psychological level. It retraces again. And what candlestick pattern is this too?
This one is another tweezer top.
Another tweezer top. And then you go into the trade. You see, it comes to a psychological level and it comes even further than a psychological level. Do you understand what I'm saying?
Yeah.
But because we are in a downtrend, we only look for down opportunities generally. So all this place, it is not a down opportunity, it's an up opportunity. We wait till we get here. This is our psychological level. What is this? What would you call this?
That's another tweezer top.
Another tweezer top. If you wait for this candle, it becomes something like an evening star. And then you trade this to the psychological level. Does it make sense? Yeah. And then here, it looks like there was going to be a reversal, kind of funny. But here you can still trade, but that is exceptional trading. There's a way we do it. It's the same thing. You follow the same concept though, but you are expecting that you're trading between this and that in that case.
Okay.
You know what I mean? So it gives you something like a morning star. You wait for the candles to cross. So the candle crossed this one. You retested, gave you this tweezer, retested, then you can go into the trade. It's not as simple as that. But you can get a clear one here. You have something like a tweezer bottom here. You go into the trade. You trade between the yellow and the red because we had a downtrend. So you hardly find opportunity to go up. So all these things, it's exceptional to the rule. Now, we got to this place. This one still is telling us that we're going down. So you're looking to trade between the yellow and this one. That is the 20 and this thing. It gives you something like an evening star. Then you trade. You know what I mean? Comes, it gives you another evening star. You trade. Here, it gives you something like an evening star, but you didn't know what to do. You can leave it. You can stay out of the trade. Oh. Now this opportunity gives you a tweezer bottom. We are trading it to the 100. So we trade just this opportunity. But just that with this, you get bigger opportunities than the other ones. But then this one is not as simple. And if you are going into trades, you just don't look at candlestick patterns alone and trade. You see here, for example, when we have this candlestick patterns, we went into trade there, but look at the bottom here. You see we had a clear green, which means we expect to have more green candles. So you use candlestick patterns. Look, you had the this thing, TDI also crossing. At that time, that's another confirmation that you can go. And then we have a clear bottom here that, you know what, we have printed or we've printed or we're about to print a green bottom. So then all these three is a good confluence for you to go into the trade. So we're looking to trade here. You went past there, you can still stay in the trade to the top. You know what I'm saying? Now, let's look at the other ones and what confirmations you would have had. So, for example, we talked about this one here, this tweezer top. You can clearly see that CDI is crossing down you can see that we've printed a red top, which means you're about to go down. And then from that to the top, we started going down. And we retrace. You have this bullish engulfment, but it was still in the same trend. So if you like, you could have stayed in the trend all the way till we get a green that we're going the opposite way. You know.
If you took that trade, what would the percentage be on that one?
Okay, the percentage from your teaser top, let's say to the point where we got to the green, is 18%.
Okay.
That's huge. You know what I mean? Because 18, if you're leveraging a 7, it's almost 120 or 110, that kind of thing. And then you get this after the tweezer. So literally speaking, we would have been in the trade till this point, till the psychological level. From here, let me measure it there. To that psychological level, that's 21, or let's say 20. Do you understand? And now you come here again. When you got here, there was no clear this thing. This candle gave you this green, and then you got here. When you got here, it wasn't very clear, but then you would have to use TDI. TDI was crossing down again, you see? So if you don't get clear confirmation there, that's why we have many, many confirmations. It's on a psychological level. That's 1. TDI is crossing, that is 2. We have the candlestick patterns, that is 3. At least you have 3. So I've given 4 options here. When 3 satisfies, you can jump in.
Okay.
So you go here, and it's another 18%. Do you understand? Yeah. So you can just follow the trade. And management of trade is another thing. We have to teach also trading psychology. It's a different thing altogether. You go into the trade and you start panicking. It's like, whoa, is it going to go my direction and blah, blah, blah. So with that is why we do a lot of testing, and that is why we do a lot of this thing, demo account trading. You have to trade and trade and trade and trade and trade. So you get used to how you trade without money, just to get comfortable with how the trade works. You know what I mean? This is another clear one. You see TDI was crossing here when we formed this top. At that time, we're about to print the top. Excuse me to say. We're about to print the top. So when we print the top, we know we're going down. So, and then what's that on? We had the psychological level, bam, area. So you could have gone just straight into this one. Sometimes what I notice is that when you don't get a clear psychological level, I create 2 sets of psychological levels, which I'll teach on the next lesson. Okay. And then you turn the other one off. You see, I've turned this one on, and I've turned the other one off. So it clearly tells you that this is a sub-psychological level that is forming on. And then you can go in and trade to the next sub-psychological level, which is clearer. That's about 9%, you know, and then you would have come out of the trade. When you came out of the trade, you came to find another opportunity here. Because you got a top, TDI just crossed. You're on a psychological level again. And then you trade another 11%. So these percentages are huge, but they don't come like every day. So you need to wait for it. You know what I mean? And with that, you have to be patient. And that is a challenge for all of us. We need to learn that. Me, myself, I need to learn patience. Like I'm looking at the trade right now as we speak. I'm looking at that. But imagine this started at 5, it finishes at 9. If this candlestick finish and it is, but you see, if I say I want to go up, I don't have the confirmations. TDI is now coming up. TDI has not hit this one to cross yet. Neither do I have a bottom. Do you get what I'm saying? I don't have a bottom, a green bottom, to tell us that we're going to print green. So this, I wouldn't trade that. I need to wait for the right opportunity to come in. So I'm saying, so I'll go to bed, wake up at 5, or maybe 5 minutes before 5, come and look at the charts, see what's happening in the charts, because the candlesticks changes on the 4-hour, every 4 hours. So when I go to bed tonight, 1 a.m., I'm not waking up, I'm sleeping. 5 minutes or 10 minutes to 5, I'm up to come and check the charts. Once I've checked the charts, or I do my analysis and see there's opportunity, I'll take a trade. If there's no opportunity, I just close my thing and I go and I'll pray, which meaning that I get to pray, start my prayer early. I do my 1-hour prayer and read my Bible just to prepare my spirit and my mind for the day. But if I come and there's an opportunity, I'll go into the trade and I go to pray, that kind of thing. So then after prayer, if I have to go swimming, I go swimming and do my stuff. And then you check the trades as you go. You can check it on your phone, blah, 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 that kind of thing. So that is what it is. I think, any more questions?
I just wanted to ask, there's one more question.
Go on.
See, with the TDI, yeah?
Mm-hmm.
When would you enter the trade? Would you enter as soon as it crosses, or when it like travels a little distance?
The point is with TDI, we only use TDI as an additional confluence.
Mm-hmm.
What I mean, an additional TDI shouldn't be the thing which tells you, because this one, we call them lagging indicators, all these things.
Okay.
Lagging indicators, you don't use them to enter trades, you use them to guide you for direction.
Oh, okay.
So like, for example, you see this is turning up gradually. When by the time it gets here, I've gotten the right candlestick pattern. The candlestick pattern is a leading indicator. So that can lead you into a trade more than this. But when it is coming in the direction, it tells you, oh, we are going to the same direction as the candlestick patterns are telling me we're going. We are forming on a psychological level, fine, which gives me a more leading indicator that we can go in the direction. And then we should make sure too that the momentum is way down at the bottom here. You know what I mean? About to maybe print a green to take us up. So this is a lagging indicator. This is a lagging indicator. This MA is a lagging indicator. This is a lagging indicator. The EMA, which is a smooth one, the 5, it's more like a leading indicator because that's quick and that can tell you the direction, because the candlesticks have to snap to it. So if it is way away from it, you know that it must snap. So it gives you an idea what should happen. You know what I mean? Yeah. Mm-hmm.
Thank you. I appreciate it.
Yeah. Any question, guys? So there.
Cool.
Hello.
I just wanted to ask a question in regards to next week. Is there anything we need to bring, like our laptops or anything?
Bring your laptops. You can go like you're going for a lecture. Bring the laptops. The lectures, what we need for this, as I've said from the beginning, you need your laptop. I believe that I need to touch base with Reverend to ask if we've got internet at the church.
Yeah, we do.
Yeah, so if we have internet, we can just tip it off the internet at the church. And one other thing, the Reverend wants me to get this recorded. So I think people who are not able to make it physically would have to get into Zoom. So we will just do it straight away from there. So I need to check the details while the day's going to go. But come prepared. Come with your laptops. Come with your whatever you would need, maybe notebooks or whatever. If you want to jot down notes, and then you jot it down. Everything that you need, because it would be pathetic. You just come there with nothing. It's not like even when you go to church, you have your Bible, you have your electronic Bible and whatever. So come prepared. Okay.
All right. Thank you.
So I think we will get to talk details about the thing, because unfortunately I might not be able to get to engage with yourselves again. We'll just engage on the platform. So once Reverend the flyer comes out, we would know.
Okay.
Yeah. Thank you.
Thank you.
Okay. Any more questions? Okay. If there are no more questions, then we can round up, and then we'll call it a day. I'll be loading the videos today. Thank you all. Bye-bye.